All right, so I'll do a follow-up here from yesterday's video. The dollar did come down and break this uptrend line. It's a pretty dependable signal that the daily cycle topped right here. It's not 100%, but we are getting some more follow through to the downside this morning. And the next step is whether or not we can um, create a new pattern of lower lows. So the break of the trend line was the first confirmation. If we continue to get follow through here to the downside, and if we break below this daily cycle low, that will signal that we've got a left translated and failed uh, daily cycle in progress. That would put the odds very heavily in favor that this intermediate cycle has topped and rolled over. Usually when the pattern reverts to one of lower lows and lower highs, that means the intermediate cycle is topped. And everyone is so focused on the stock market right now. There's nobody is watching this, and this is important. Um, this is telling us, if the dollar's topping, that's probably the driver for. It's certainly driving gold higher, and it's going to drive a bottom in the CRB. As we know, we're in the process of moving down and finding that 3-year cycle low in the commodity complex in the CRB. And a lower dollar um, is going to create inflation down the road, not deflation. And at some point, this is going to drive a bottom in stocks as well. During the beginning phase of an inflation, of course, it doesn't look like you've got inflation. At the beginning phase, everyone is looking in the wrong direction, so everybody is expecting deflation at the bottom of the 3-year cycle low. It's what happens once that bottom is struck, and then we start going in the opposite direction um, that's going to matter. And we're going to have inflation in the years ahead once we complete this um, major cycle low in the CRB, and this is also going to be a 4-year cycle low in the stock market. Um, the initial phase of an inflation tends to be good for everything. Everything rallies. It's not till the very end stages of an inflation that inflation becomes detrimental to stocks. When we get to the point where inflation starts to collapse consumer spending, then then that's when inflation becomes problematic, and that's what we had um, back in 2008. All right, so this is the final stage of inflation. And this is where it becomes detrimental uh, to the stock market and to the economy. Is when you get this final move into the top where inflation increases too rapidly. The move is too large to the upside and it's occurring too rapidly. That's where the inflation collapses the middle class spending and you get a recession. Um, Back here, as we were forming the 3-year cycle low with oil at $50, no one was expecting inflation at this point here. So everybody was looking in the wrong direction. Same thing right here. Nobody was expecting any commodity inflation at this bottom. So it's what happens as we come out of these bottoms that is important, and it's what nobody is ever looking ahead at what happens once these bottoms are printed, and we're in the process of making one of these major 3-year cycle lows right now. Same as here and here, and again back here in 2016. And I think once this bottom is done, and we've got confirmation that the dollar has topped and will resume its bear market, then this next stage uh, will be inflationary over the next 5 to 8 years. So we're a long ways from this kind of a spike here, but we are in the process of printing one of these major multi-year cycle lows. Everybody is focused in the wrong direction. They can only see price continuing to go down and down and down. They don't, there's no fundamental driver. They can't find a fundamental driver for price to turn around and go up. Uh, but the fundamental driver uh, is in the dollar. So here is your fundamental driver. We started a bear market right here. First leg down, we get our 3-year cycle low, bounce. The bounce has been very weak. We're already into the second intermediate cycle, and we have not been able to even come remotely close to taking out this high. This cycle is already in jeopardy. The second daily cycle is in jeopardy of rolling over in a left translated pattern, and then the dollar should. Um, my call continues to be that we're now in a long-term secular bear market for the dollar, and this is going to be going down for the next 5 to 8 years. So we're in the process of rolling over here, and nobody is watching this, what's happening in the dollar. Everyone is focused on the stock market and the commodity markets, and their emotions have gotten locked in one direction, that price can only go down, and people can find all kinds of fundamentals for why that's going to happen, and everyone is missing this fundamental that the dollar is topping, and we're about to resume the bear market that started right here. That is going to be the driver for everything to reflate in the years ahead, and then towards the very end, we'll get another spike in inflation like we did in 2008 that will cause a recession.